If you're new to real estate investing, it's common to feel overwhelmed with all the different types of real estate assets out there. There's single family homes, mobile home parks, office, industrial, retail, and of course, multifamily. In this video, I'm going to walk you through the basics of multifamily real estate investing to help get you started. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 12-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about the basics of multifamily investing. So multifamily for beginners. I think a good place to start would be, what do we mean when we say multifamily real estate in the first place? Because if somebody's talking to you about multifamily, they could mean one of two things, and this can cause some confusion with beginners. So let's break it down like this. I'll draw my two columns. We've got residential and we've got commercial. And when I say residential or commercial, I'm really talking about the type of financing, the type of debt a lender would place on the property. So on the residential column, we have a duplex, triplex, fourplex, fiveplex, sixplex, and even sometimes a sevenplex would have a residential type of mortgage, a residential loan put on the property. And with residential financing, the lender is looking at you, the borrower, first and the property second. So you as the borrower have to qualify for the debt and be able to support the debt payments, whether or not the property produces income or not. So the lender is really focusing on you. Now, when we flip over to the commercial side, when somebody's talking about commercial multifamily, they're really talking about something over a 7-unit property. So we could have a 10-unit, we could have a 15, 20, 30-unit property or more. And then within commercial, we have really two separate columns, and we break it down further. So we have non-institutional, and then we have institutional investing. And of course, I'm trying to spell institutional while I'm doing the video. An institutional grade investment would be something, generally speaking, over 100 units, so 100 units plus. Non-institutional types of investments would be under that 100-unit mark. So you could have a 75-unit property, you could have a 50-unit property that would not be considered institutional. So as you can see, within the commercial space of multifamily, you can have a 20-unit, you can have a 75-unit, you can have a 100-unit unit, you can even have a 500-unit property. So when somebody's talking about commercial multifamily, they could be talking about any of these things, and then it would be broken down further into institutional and non-institutional types of properties. And when we're securing financing for commercial multifamily real estate, the lender looks first at the property and the borrower second. The lender wants to make sure the property is in a good position. So if it's stabilized, if it's producing positive cash flow, what's the business plan for the property? Is it in a good area? Do they like the market it's in? Then they look at the borrower and the team acquiring the property. Are they experienced in that type of asset? What property management company are they using? Is that property management company experienced with that class of property, etc.? All those things come into play. So, but in a nutshell, residential financing, and with residential multifamily, the lender's looking at you, the borrower, first. And with commercial financing, you have interest-only payments, you have different terms, you have balloon payments, but that's going outside of the scope of this beginner multifamily real estate investing video. Let's talk about some of the advantages of acquiring and investing in multifamily real estate, because there are many, but I'm going to limit this video to 4. So number 1, we have cash flow. Multifamily is exceptionally strong with cash flow. And cash flow, as you know, it makes the real estate world go around. Without cash flow, your deal dies because you can't support the debt payments and the leverage necessary to make the deal happen and to make it profitable. So exceptionally strong cash flow. If you're looking at investing in a single family home, you have one tenant and they're paying the bills, But with a multifamily property, let's say you're acquiring a 100-unit property or even a 50-unit property, the economies of scale work in your favor. You have your expense ratio takes up less of the property's gross income. So your NOI, your net operating income, goes up. And I'll put a link right up here to a video I did explaining about the NOI, the net operating income. So strong cash flow is exceptionally important because, like I said, that is the foundation of your deal. Then we have stability. Multifamily real estate is exceptionally strong, and CBRE released a report where it looked at multifamily and its performance versus all the other commercial real estate type of assets over the past 2 recessions, and they found multifamily was the most stable. And if I'm an investor, if I'm looking to place my capital in a type of investment, rule number one is don't lose your capital. Don't lose your initial investment. And multifamily is exceptionally stable also because of the strong cash flow and all the other characteristics, but the stability is definitely a selling feature of multifamily real estate. A single family home, you have one tenant, they move out, and then your revenue goes down to zero. Even a duplex, one tenant moves out, your revenue drops by 50%. Imagine running a business where your revenue drops 50% overnight. With multifamily real estate, you have the scale. If you're dealing with 100 units and 5 tenants move out, that's worked into the business plan already. That's the cost of doing business, and the stability really makes the investment worthwhile. Then we have appreciation. Appreciation can be forced, or it can just be market appreciation. Forced appreciation is when we implement a business plan with the property to improve it. So interior renovations, exterior renovations, increasing the rents if they're under market value, rebranding the property, optimizing expenses, changing the management style of the property. These are all things that we are controlling as the investor to force that appreciation to raise the value of the property so we can profit from it. Then we have market appreciation, where the market appreciates, the market value for the property goes up, regardless of what we're doing through our value add business plan. So when these two things work together, it's extremely powerful. We're forcing the value of the asset through things that we can control, and then the market, because we've invested in a market that has strong market fundamentals, it has all the key market drivers at work, it also brings up the value of the property. And we as investors, we win at that point because we can then sell the property and realize our profits. The last advantage I want to highlight is leverage. And leverage is a fancy way of saying using somebody else's money, namely a lender or a bank. So let's say I'm acquiring a $10 million property. If I just acquire that property for $10 million cash, I put $10 million bucks of my own money into that property, that's not a good utilization of my capital. I would be much better off putting down, let's say 25%, so $2.5 million of equity in that property, and then taking out a loan, mortgaging the property, and getting the bank to fund the other 75%. My return on investment goes up, and I'm able to use that capital, that leftover capital, that $7.5 million, to go out and acquire other pieces of real estate. Leverage when it comes to multifamily is especially powerful because lenders love lending. They love giving us money for multifamily real estate. The reason is the cash flow, the stability, the appreciation aspect of it. Lenders find multifamily extremely safe, extremely stable. Thus, we get to take advantage of extremely favorable interest rates. Lenders love lending on this, and they will compete to lend on a solid multifamily property. So we can take advantage of low interest rates, and that's going to boost up our cash flow and allow us to put more cash back into the property and force the appreciation. We also have different types of mortgages. We have interest-only periods that will also help boost up the cash flow as we implement the value add process. And I'll put a link right up here to a video I did talking about interest-only mortgages. The question is, how do these multifamily deals happen? And to answer this, I'm going to draw what I call the real estate matrix. So the real estate matrix is made up of 4 components. So we have the deal, we have financing, we have the capital or equity, and we have management or operations. No deal can happen without all 4 of these components working together. Somebody may have a deal, but they can't get the financing and they can't manage it, but maybe they have the capital. The deal can't happen. Maybe somebody's a great property manager and they can manage the construction and renovation of a property, but they can't get the financing and they don't have a piece of property to develop. The deal can't happen. Maybe somebody has a deal and they can get financing and they have the management, but they don't have enough capital to close on it. The deal can't happen. So this is the real estate matrix at work. All four of these components must be there in a multifamily deal for it to happen. This leads me to another advantage of multifamily real estate, and this directly relates to the real estate matrix. So oftentimes we have investors out there who would love to invest in real estate. They've always dreamed of investing in real estate, but they're busy working their normal jobs, earning a high income, doing what they do best, but so they don't have the time to start a brand new company, a brand new startup, and learn real estate investing from the ground up. So they have the capital to invest, but they don't have the financing, the means to finance a 100-unit property. They don't have the deal flow because they don't have the network, they don't have the experience, the track record, the team, so they don't have a deal, and they don't have the operations or the management experience. But they have the capital, and they still want to invest in real estate. This is a huge advantage multifamily real estate has, and it's called syndication. Syndication allows for investors to passively invest in an apartment building deal, bringing just their capital. They don't have to worry about the financing. They don't have to have the deal flow. They don't have to manage and make all the real estate decisions that go into implementing a value-add business plan. You know, when to raise rents, what to do, what happens if X problem occurs, when to sell the property. They don't have to deal with that stuff. All they have to do is bring the capital into the syndication, and they can passively invest and realize all the benefits that come along with multifamily real estate. And I probably should have added a fifth advantage to multifamily real estate when I was going through the list, and that is tax benefits. Multifamily real estate has tremendous tax benefits, and I'll put a link right up here to a video I did explaining how depreciation works in our favor as real estate investors. If you are a high income earner and you don't have the real estate track record, don't have the team, you don't have the deal flow, you don't have the management experience, but you have the capital and you really want to invest in multifamily real estate because of all the advantages there and your current traditional investments aren't doing it for you, there is a way for you to passively participate in these apartment buildings, and that is through syndication. And I'll put a link right up here to another video I did explaining the syndication process and how that works. So there you have it, multifamily real estate investing for beginners. I threw a whole lot at you in this video, but this will help get you started as you navigate the world of real estate investing. If you'd like to learn more about the deals I'm currently looking at, head on over to callseth.com and set up a free 20-minute phone call with me. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think. It really helps the channel. And until next time, happy investing.